Hold on a second. What I'm about to tell you might sound completely insane at first, but the truth is, a magnitude 5 earthquake is quietly forming right beneath the foundation of the silver market, and absolutely no one is talking about it. Don't expect to hear this from the suits on CNBC or the guys running billion-dollar hedge funds on Wall Street. Even the old-timers who lived through the 1980 silver crash are blind to this. Look at the calendar. December 2025. We are standing right at the precipice, in the dead silence between Stage 4 and Stage 5. And believe me, when Stage 5 hits, the Hunt brothers' squeeze of the past is going to look like a practice round. But before I expose just how brutal Stage 5 will be, you need to erase the idea that silver is just some metal used for wedding rings. Wrong. This is the most suppressed, most mispriced, and most tightly coiled commodity on the planet. Let me walk you through the 4 rungs of the ladder we've just climbed. Because if you don't look back at the past, you won't have the guts to believe in the future that's coming. The history of the previous 4 stages. Stage 1, 1999. Rewind the clock to 1999 to witness the genesis of Stage 1. Back then, silver was trading at $5 an ounce. That's right, you heard me. $5. You could walk into a store, skip a sandwich for lunch, and walk out with a solid ounce of silver. The whole world took it for granted. Mining companies were going bankrupt left and right. Nobody gave a damn about precious metals. In the eyes of the crowd, gold was dead. Silver was buried. But right when the market was most desperate, a silent shock changed the entire chessboard. Central banks who had been net sellers of gold for 2 decades suddenly stopped. The Bank of England had just executed a sell-off that went down in history as a joke. They dumped half their gold reserves at the absolute bottom, $275 OZ. It was the worst trade in financial history, but it was the bell ringing that the bottom was in. Silver started to creep up. $6, $7, then $8. The crowd was still asleep at the wheel, but in the shadows, the smart money had started quietly accumulating. By 2003, silver stood at $5.50. Still dirt cheap, still ignored, but the stage was set for the main event. Stage 2, 2008 to 2015. Crisis and the printing press. Then Stage 2 hit like a hurricane in 2008. The financial crisis exploded. Giants collapsed right before our eyes. Lehman Brothers evaporated. Bear Stearns was wiped out. AIG was on life support with bailout money. And the Federal Reserve did the unthinkable. They fired up the printers and pumped $4 trillion out of thin air to save the banking system. The result? Silver reacted like a beast unleashed. From a meager $9 in November 2008, it rocketed to $49 by April 2011. A 5x move in just 30 months. The crowd screamed that it was a bubble. They said it was insane speculation. They warned it would crash like 1980. And they were right. It crashed, and it crashed hard. By 2015, silver was back in the gutter at $14. Those who bought at the top saw 70% of their accounts vaporize. The media gloated, "See, silver is dead," but they missed the most important lesson. Stage 2 wasn't about price action. Stage 2 was irrefutable proof. When central banks print fake money, real assets revolt. When you create trillions of paper dollars from nothing, capital flees into things that cannot be printed. And silver is the most responsive metal on Earth. Stage 3, 2020 to 2022. The pandemic and retail power, March 2020, marked the beginning of Stage 3. The world froze. The economy stopped. And this is when central banks pulled a magic trick that made the 2008 bailout look like a warm-up act. They pumped out $18 trillion in just 2 years. The Fed alone printed $5 trillion, an unfathomable number. Silver reacted exactly according to the old script, but this time at lightning speed. It shot from $12 to $30 in just 5 short months. But Stage 3 had a brand new variable, one that made the old financial guard tremble. The arrival of the retail investor. The army from Wall Street Bets and Reddit turned their sights on the silver market. They didn't buy paper. They bought real silver. They swept SLV, the biggest silver ETF. They crashed the servers of every major bullion dealer in America due to traffic overload. Premiums were pushed to insane levels. $10 over spot price. Stage 3 was a declaration of war. For the first time in history, average people proved that, when united, their buying power was strong enough to break the manipulated paper pricing system. Stage 4. The present. The truth about supply and demand. And now, we are in Stage 4. This is the most dangerous stage because it is the quietest. Nobody is talking about it. But it is the most critical because it rests on fundamentals that no amount of manipulation can cover up. Look at the numbers, they don't lie. First, supply is in freefall. Global mine production peaked in 20,16900 million ounces and has now slid to 830 million. Why? Because the easy-to-mine deposits are gone, and most silver is just a byproduct of copper or zinc mining. You can't just simply dig more. Second, demand is exploding. Industry is devouring 600 million ounces a year, from solar panels and EVs to 5G networks and the phone in your hand, they all require silver to function. Third, chronic deficit. We have consumed more than we have produced for 5 years straight. And here is the death blow. Reserves are running dry. At the COMEX, where the market is priced, the amount of silver available for delivery is down to a measly 250 million ounces. Sound like a lot? In reality, industrial demand could wipe that out in 5 months. Why Stage 5 will be completely different. From 1980 Daunt. Let the uninformed mislead you with stories about the Hunt brothers in 1980. Any comparison is apples and oranges if you don't understand the true nature of the game. Look back at 1980. The Hunt brothers were just two billionaires playing with fire using massive leverage. The US government broke them easily by changing the rules, raising margin requirements, tightening regulations. Furthermore, the world was awash in silver back then. Government stockpiles from the US, India, and China were full. When the price hit $50, they flooded the market and drowned the squeeze in a heartbeat. But today, the story is the exact opposite. Empty vaults. The US strategic stockpile? Sold off long ago. Silver in India and China? It's been melted down into jewelry and religious artifacts and will never return to the market. Existential demand. In 80, silver was used for photography, something replaceable. Now, you can't make a solar panel or an EV without silver. When the price rises, industry can't stop buying. They are forced to buy to survive. Impossible to ban. This time, it isn't two Texas cowboys. It's millions of retail investors and hundreds of institutional funds. You can squeeze two guys, but you can't change the laws to fight the entire world at once. The scenario for Stage 5. The collapse of the paper. Market Stage 5 isn't a market correction. It is the death knell of the paper pricing system. It is the moment the curtain falls, revealing the fatal gap between the fake price on the COMEX and the real value of the silver bar in your hand. The data doesn't lie. ETFs like SLV are acting like giant black holes, sucking hundreds of millions of ounces of physical silver into vaults and locking it away. That silver will never return to the market unless the price goes nuclear. When does this bomb go off? Tomorrow? Next year? Or 2027? No one knows exactly, but the fuse is lying right at our feet. A major mine collapse, panic buying from Tesla, or a new squeeze from an angry crowd. And when it starts, the script will play out so fast you won't have time to react. Week 1. The spark. Price jumps to $40. Premiums start to widen. Week 2. Panic. Industrial factories buy in a frenzy. The price breaches the $50 mark. The media screams, and the FOMO crowd piles in like moths to a flame. Week 3. Depletion. COMEX inventory drops below 100 million ounces. ETFs announce they are out of stock. Week 4. Capitulation. This is where the charade ends. The paper price might be $60, but you want real silver? Cough up $90. COMEX declares force majeure, forcing cash settlements. Month 2, Month 3, global chaos. Silver could hit $150, maybe even $200. Of course, after the mania, the price will crash. But don't dream of it going back to the old lows. A new floor will be established at a much higher level, maybe $80 or $90, because this time, the shortage is structural. It is real. It's not a game like 1980. Conclusion. Let me be blunt. Stage 5 is not a hypothesis. It is an inevitability. The only variable left on the table right now is time. When does the clock strike zero? The difference between the rich and the poor in the coming decade will be decided in this very moment. Those who dare to act first will build generational wealth. Those who hesitate will pay a brutal price or watch bitterly as the last train leaves the station. Don't call this a conspiracy theory. Call it by its accurate name: basic math. We are burning through more than we dig up. Reserves are draining by the second. 1 minus 2 never equals a positive number. The day of reckoning for this shortage is coming. Are you ready?